Good morning. Thanks for tuning in. You're watching Ask BQ, a show where all your stock market related queries get answered. I'm Smriti Chaudhary and with me is Alex Matthew. For the next 30 minutes, you can continue sending your questions to the YouTube live chat or through any of our social media channels. You can send in your questions through the WhatsApp number that's on your screen right now. Let me introduce you to our guest for today. We have with us Mr. Vivek Karwa, Chief Executive Officer, Vridhi Investment. Welcome and thank you for taking the time out. Before we begin, let's look at the markets and what we're focusing on today. So today we look into the FMCG sector and especially the Britannia earnings and the Godrej consumer earnings. Alex, how were the earnings and what are the cues you're taking from the market today?
Well, as things stand right now, I'm looking at the benchmark index and it's about 0.7% higher off the day's high. But certainly the positive handover from the US markets and indeed the risk-on sentiment that's pervading across global markets is benefiting India as well. And so the benchmark index is trading comfortably above the 19,100 mark at this juncture. And a couple of names stand out, right? And the names that Smriti just mentioned, Britannia, one of the top gainers in trade today, gaining over 2% at this juncture, if I'm not mistaken. In fact, 2.5% or thereabouts at this point. And I'll very quickly take you through the key numbers to watch. Britannia's revenue grew about 1% or thereabouts, but EBITDA was up as much as 23% or thereabouts, and margins expanded quite a bit. The estimate consensus was at 17.6%, but it came in at 19.7%. The PAT number was up as much as 19.6% at 586.5 crore rupees. And Godrej Consumer as well reported quite a good set of numbers, a 20+% increase in the PAT number. The margin again came in quite strong at 19.5%, and that's an improvement of close to 350 basis points from the comparable quarter. So positive signs. And also interestingly, there was a report just a short while back, Vivek, and I saw this in the Economic Times today, I must point out. And this is from the global research firm Kantar, which says that a turnaround in the FMCG sector is now underway or could be around the corner, because you saw sales volume in rural markets that went up by 6.2%, in cities by 8.4%. And also from the numbers that we're seeing, Vivek, we're seeing some of that pressure on the margins come off. What is your opinion on these two counters and the FMCG pack as a whole?
That report even I saw in the morning, Alex. And what I feel is these two counters, of course, the results have been spectacular. As you were going through them, I got the numbers again. And see, what I feel is after COVID and the margin pressures due to commodity prices increase, mainly the food input prices, this is now cooling down. And that's the reason it's all about game of margins in FMCG, because they better the margins, the companies would do good. So EBITDA looks good again. And in fact, between Godrej and Britannia, I like Britannia numbers even more better, because the company is again posting almost return on capital of approximately says 50 percentage, which is superb. So I think the stock should continue doing well, and I'll not be surprised if it is a 5,000 rupees stock as well. So overall, FMCG, as you asked, I feel that because the rains have been, the monsoon has been overall good. So the rural consumption is now ticking up, and that should continue as such. So FMCG will make a comeback. And again, see, next year we have elections, and there is some connection between elections and FMCG goods selling, doing good. So I think it's positive sentiment.
All right, let's start off with the questions now. First question is from Sonu, and he's talking about Titan. Now, the question he's asking is, can Titan beat Nifty 50 for the next 5 years? The results are expected today. If I look at the performance of Titan, it has given 20% returns in the last 6 months compared to Nifty 50, that is only up about 5%. Vivek, how do you see Titan in the next year? Do you think that it's going to beat the Nifty 50 again?
see, what is going to happen is as the consumption boom picks up in India, and we are on just verge of that $2,500 per capita income. And as and when that goes up, see, you can look at companies like Ethos and other jewelry stocks, how the sales are happening. And in fact, nowadays nobody wants to buy smaller cars. Everybody wants to buy SUVs. So this trend would continue, and I feel that Titan over next 5 to 10 years, not just 5 years, 5 to 10 years would really beat Nifty. Yes, there would be times of underperformance, and this time the underperformance particularly was because of COVID, and people did not have surplus cash, but that's now past. So going forward, I feel that Titan is one company wherein it will ride the consumption boom also, and it will ride even the jewelry boom as well. So definitely you should hold it in portfolio, and I find that 5-10 years would be really.
Okay. Just want to point out we're also joined by Shrikant Chouhan, who's the head of research at Kotak Securities. Shrikant, thanks so much for taking the time. We were just discussing Titan, and the question that our viewer had, Sonu, was that will Titan outperform the benchmark Nifty 50 over the next 5 years? And I think given a past history, one wouldn't bet against this counter. Even if you look at the last 6 months, the performance has been stellar. On the charts, would you say that it's a strong buy even at this juncture?
Yeah, good morning. Yeah, I think for next 5 years, certainly we can say that the Titan will outperform to the Nifty and maybe to a number of stocks which are there in the Nifty, because the way the performance is there. And most of the time, whenever the stock has fallen, it has attracted a lot of specific buying interest in the market. And the way there is a lot of mutual funds and new portfolios are coming in the market, definitely they are going to increase their exposure to the same. We are of the view that Titan should be on the watch list as well as on the buying list whenever there is a correction in the market. The ideal strategy should be to buy on dips or buy whenever there is a correction in the market, because most of the time the stock trades with very rich and expensive valuations. So it is always better if there is any correction. But yes, if there is a view of next 3 to 5 years, certainly it should be buy even at current levels.
Okay, let me take the next question, and it's an interesting one. We've not got a view as to whether Shrenik Shah, whether he has bought into Varun Beverages or not. Oh, so he's saying he's doing a dip. He's just replied to my message. He's doing a SIP, and he's holding about 2,000 units at an average price of 445. So he has been accumulating this stock for a while. The question is, should you continue that strategy, and what's the view on Varun Beverages, both on the fundamental side and the technical side? Let's start with the fundamentals. Tell us what's the view, Vivek?
See, if you look at the quarterly sales numbers, in fact, they are on a growth trajectory, and this quarter, in fact, June quarter was almost 5,600 compared to 3,900 the previous quarter. So I find that company is actually doing good. And even at this level, that is after this performance, the company has been actually going and giving good dividends also to the investors. And overall, if you look at the sales growth over last 5-10 years, it is almost 18%. So companies on right trajectory, I should say. If you're doing SIP, yes, you should continue. But yeah, see, at times valuations would be costly. So you got to keep it analyzing every 3 months. But yes, you should continue your SIP right now.
Yeah, well, so and also I think this is a factor of the concentration risk in your portfolio as well. I would think, Shrenik, what is the kind of holding as opposed to everything else in your portfolio? But all other factors remaining equal, and assuming that you're well diversified, I'm going to take it also as a technical check to Shrikant. Shrikant, what's the view on the charts?
Yeah, technically also the stock is forming some specific bullish formation, and whenever there is a specific correction in the market, it tries to take support near to its closest average. This time also the stock has fallen to the levels of almost 900, 890, but from there again it is recovering back. So we are of the view that it is going to spend some more time within the range of 1,000 and maybe 850, but eventually we are expecting stock to move towards 1,250 or 1,300 levels. So if there is a long-term view, then yes, it should be on the buying list. But if there is a very short-term view, then let the stock fall to its important support levels like 850 or 860.
All right. Next up, we have a stock that's been in the talks today, which is Tata Steel. It reported its numbers yesterday and posted a surprise loss of about 6,000 crores after taking an impairment and provisions. The next question is from Rajesh Maheshwari on this counter, and he had bought 2,800 shares at an average price of 105, and he wants to know the long-term outlook on the stock. Vivek, what are your views on the Tata Steel stock?
The company is not going to do good in short term or medium term. But if you look at long term, I think the prospects of the company is actually good. Why? Because one is the commodity cycle, which was on downtrend, has, I should say, completed. And if there is recovery in this cycle, the company should do well. And this one-time loss, right, there are a lot of issues globally as well. What I find is one, commodity recovery, company would do well. And companies again on right path to reduce its debt and at some point of time become debt free, both Tata Motors and Tata Steel. So as and when that happens, so that might happen over next 3 years. So as and when that happens, the company should continue doing well. So at 105, it is, I don't think you'll get that price until and otherwise there is panic in the market. So you should hold it on. But when it goes to 130 levels, at that time, you should again call us and ask, because at that point of time, it might be a good profit level as well. So 116, please hold it on.
All right, let's take a technical check also on this, since the stock has lost about 10% in the last month. Good morning, Shrikant. What are the charts showing for Tata Steel?
Good morning. I think, the stock has fallen vertically from the highs of almost 130 to 110. Where it had support of 200 is simple moving average. And even if we go through with the results, then it is mainly because of its European unit, which is like pausing to the overall fundamentals of the company. So I think if that particular threat is there, then the stock is not going to outperform, or maybe it is going to remain in a range. But as Vivek said, I think, yes, the stock is going to spend time. 110 or maybe 105 is the area where we should look for adding some positions with a very short-term view, because we are not expecting stock to move beyond 130. So maybe the stock is going to spend time between 105 and 125. That is the overall view. And in case if there is any pullback to the levels of 125 because of any reason, then we should look for exiting out of the same, because there are like number of stocks or maybe number of sectors which are available to buy and hold for a longer term, with a longer term view.
Okay, all right. Let's take our next question. We've got Arpan Singh Gautam, who's asking about pharma stocks, the likes of Jubilant Pharmova, Laurus Labs, Hikal, and Syngene, specifically, from what he has identified. Is this the right time to buy some of these stocks? Vivek, on the fundamentals, how do they look?
You'll have to repeat the names, but overall view on the pharma is quite good. In fact, I should say I am heavily invested in pharma sector, and this sector is, in fact, if you look at last 3 years, the sector has underperformed. Even if you look at the mutual fund holdings of mutual funds, pharma mutual funds, even they have underperformed because the overall sector has done bad. But now, due to the say demand in the US and in fact the supply shortage over there in US, I think Indian companies would continue doing well. And there is all possibilities that in next 3 to 6 months or maybe 9 months, the sector would revive from here and give a good bounce back. So you should be in various pharma companies. In fact, one of my favorite is Piramal Pharma, which I've been speaking many times since 70 rupees. It is at 105, 106 now. Even that looks good. So overall, whatever names except Laurus, I think all the names you mentioned are decent enough. You should at least be equal weight in each company.
Okay, why don't I also take this across and forgive me, get a view, Shrikant, on the names that have been mentioned. Let me just read that list out to you again. We've got Jubilant Pharmova, Laurus Labs, Hikal, and Syngene. What's the view?
I think in that Hikal looks good, which is currently trading around some 280, 81. The stock is trying to form its like a higher bottom sort of formation. And the stock has spent a lot of time within the range of 280 and 320. So based on its overall technical formation, I'm expecting stock to move towards maybe 350 or 400 in the long run. But yes, it is advisable to avoid Laurus Lab because the stock is consistently failing to sustain at higher levels. And in case if it sustains below the mark of 300, then we can expect further more weakness. So it is better to stay away. It is better to buy any one or two stock out of the overall given list.
All right. Next up, we have a question from Naresh, and he's talking about CAMS. And the stock has corrected about 10% in the last 1 month. And he wants to know if he should wait for the stock to correct more or he should add it right now. Vivek, what's your view on CAMS?
You got to look at the company with a longer term perspective. There are only two companies. It's a duopoly in this market. One is CAMS and one is KFintech. And if you look at the mutual fund industry as such, all estimate there is a report by 2030 will be like 100 lakh crores. So that's going to be a big industry, and there are only two companies which are going to serve this AMCs. It's CAMS and KFintech. So it is going to be a high growth company. We are talking about only 7% of population investing in markets today, and that number is going to shoot. So if you look at quarter-on-quarter results, it is not going to help you in CAMS particularly. You should be longer-term investor. It should be your, one generation investment. So please hold it on if you are having it. And as in when there are dips, you should actually add it on. So do a SIP in the stock. It's going to be your, future stock.
Shrikant, what's your view? Should Naresh add it at this point, or should he wait for the stock to correct maybe more in the next couple of days or month?
No, I think, the stock is showing a lot of weakness, and this time the stock has fallen vertically. I'm to say there is a good amount of sell-off that we witnessed in the stock from the levels of 2600. Almost it reached the levels of 2200 in a very short span of time, which clearly indicates that the stock can again fall back to the its previous low of 2000 or maybe 2050. So it is better to stay away from taking any specific position in CAMS. But yes, if there is a medium to long-term view, then certainly we should look for adding CDSN to the long-term portfolio, because technically the stock is showing a lot of strength. And currently, yes, the stock is expensive, but if there is any correction and stock falls to the levels of, let's say, 1300, 1350, then there we should look for adding the stock. But at these levels, CAMS, certainly we should look for a while.
Okay. Girish Sharma, and this is, gentlemen, our last question for the day, so request you to give us a quick answer. Girish Sharma is asking for Diwali picks, perhaps just a week early, but he's still talking about the next 1 to 2 years. So I guess this is your top fundamental and technical picks as they stand right now. I'll go to you first, Vivek.
That's a difficult question. But see, if you look at Diwali pick, I would say a very defensive company. It's a company called Nesco, Nesco. The growth of the company is in fact fabulous. If you look quarter on quarter, last many quarters, but the stock is not performing. So that's the thing. So today or tomorrow or maybe next month, I don't know when, but before next Diwali, I think it should be at least at 800 rupees, and right now it's at 650. So that's a quite safe bet which I have given, because it has suddenly, it's a sudden surprise exam what you have done. So Nesco looks quite good to me, and if you look at longer term perspective also, I think it's a company we should actually trade at 1,000 rupees.
Yeah, so like you said, I asked you a surprise question. I've given Shrikant a little more time to prepare, I guess. So Shrikant, what's your view? Or what are the stocks that you're picking for us?
Yeah, I think certainly there are number of stocks which are one can invest, because the market is also correcting from the highs. It was around 20,000 levels. From there all the way it is at 19,000 levels, and we have already worked upon the Diwali picks. So from that, if I would like to share any few stocks, then in that we like Canara Bank, which is our preferred pick. It is currently trading around 380-85. There we are expecting stock to move towards minimum 425, and maybe in the long run the future for the stock is excellent. So based on the fundamentals, we like Canara Bank. We also like Cipla from the pharmaceutical space. Scient International, which is currently trading around some 1550, 1560, is from the IT space. And finally, Godrej Consumer from the FMCG space. So these are the stock on which one should look for adding at current levels with a view of next at least 12 months.
All right, there you have it, the Diwali picks from our experts. That's all the time we have for today. Thank you, gentlemen, for taking the time out and for answering so many questions for us. And viewers, thanks for tuning in. We'll be back tomorrow, same time, 11:30 a.m. Until then, stay tuned to BQ Prime.